Hello and welcome back. The previous video, we learned about the quantity key drivers of the revenue. Now, this video will be about the value. So let's look at it now. The first thing we understand is the price. So the hotel has a rack rate, which is called also a retail rate, also called bar rate, means best available rate. So these rates are available for public for sale. Is also called listed price, also rate card. So the hotel always have a price which is displayed on their website, on their front office, on available for sale to general public. Let's say $100. But there are sometimes a price which is called a special rate, which is offered to a travel agent, offered to a corporate company, offered to governments, offered to OTAs. Those are all different rates. It can be different for everyone. So those are called special rates. So we have a segmentation for each depending on where we are, how we are selling the room rate. We're gonna look at that in the future videos, but for this video, just to for the sake of simplicity, we call them special rates. So this can be a discounted rate, can be your advanced purchase rate, can where the guest is getting something at not on the normal rate. So why we differentiate? Because we want to understand how much business is coming from rec rates, how much business is coming from travel agents, how so it's different rates means different business. So the hotel's composition of rates also define how well we are able to sell at high rates, or how well we are able to sell at the lower rates. Then there is a term called average daily rate, which is because the hotel is being sold at many rates, so you cannot compare the each and every rate compared to the daily, right? So to compare daily average, how you are going to do that? So what we normally do is we calculate an average of total revenue divided by the total number of occupied room nights, paid occupied room nights, and then we arrive at average daily rate. So this rate is compared on a day by day basis to see where the hotel revenue is, where how is the hotel's average rate is faring, sorry. And also this rate is also compared in amongst the hotels, because every hotel has a different rate structure, different market makes. Maybe the hotels have exactly the same rack rates, but they have different market mix. Maybe somebody is selling more to the government, which is a cheaper rate, which maybe somebody is selling more to the online guests, where they can command a higher rate. So the average rate for such hotels will be higher than those which are selling mostly through the travel agents, because the rate yield is very low in those businesses, in those segments. So the average daily rate is serves a very good purpose of comparing between the two different rates. Now we have an average house rate. The average house rate is calculated based on total occupied room nights, including the complimentary and the paid occupied room nights. This is just only for statistical purposes. It does not really have any significant impact. Then you have a revenue per available room, is the most used terms compare when you are comparing the hotel's performance, because there are two different marketing strategies to maximize the revenue. Either you can reduce the price and can focus on the volume, or you can focus on the yield, means high command a high price and may not get so much of volume business. But which way is the effective way? So the better way now we are comparing is a RevPAR, which is a combination of occupancy and ADR. So this is calculated by room revenue divided by the total available rooms, not by occupied room nights. So when you are comparing, or another way is the occupancy percentage multiply by the average daily rate. So there are two ways to calculate it very quickly. So that was RevPAR. We're gonna be learning about those terms in future. So another is package price. So the hotel is selling F&B, dinner, transportation packaged into one price. So the room, it includes rooms, it includes breakfast, it includes dinner, it includes spa, it includes transportation. It may include other adventure activities. So when the hotel is combining the prices into one, so that it can provide more value with a lower price, so it's called package price. So there are complications in allocating the revenue to each individual sections. Normally there are rules specified for that. We have dedicated video for that as well, so we will look at it in that video. Then another term which we need to understand key in the value section is the gross and net rate. So what is the gross rate? The gross rate is the rate which includes VAT and service charge. VAT is the government tax and the service money. So hotels are calculating service money on the guest revenue, and the net rates are all revenue exclusive of any package price, any tax and service money. So here is a little calculation how we are calculating it. So the total let's say total revenue charge was 110,000. The tax and service charge on this was 10,000. So the net revenue was 100,000. Average daily rate in that case, we are calculating based on 100,000 100 room nights. So that one is 1,000 room nights. So the total average daily rate comes to, oh sorry, the 1,000 room nights. So average daily rate comes to 1,010 100, right? And then the total RevPAR comes to 37 based on total number of rooms available, because our available rooms were around 2,730 in the previous example. So in the next videos, we're going to be covering more about the revenue sections. Thank you very much.